All right. Hey, good morning, guys. Thank you for calling in. I really appreciate your attendance on these things. Lots going on this morning, and so I'm just going to jump right into it. We're only going to spend a few minutes on the grains here this morning, and then Michael Dynas is going to give us a fertilizer update to talk about, because I know a lot of guys are questioning whether they should be pricing some fertilizer or not. So he's a more of an expert in that topic than I am, and so he's gonna uh, give you some thoughts there. All right, so lots happening in the grain market this week. We seem to have a top in. This is the chart of soybeans. This is January beans here. I want to call your attention to this kind of weird formation, right? We've got this trend line that started on August 12th. Connects to this major pullback that we had. That line just fell about 30 minutes ago and gave way. On top of that, we had this formation that started to form late last week that caught our attention. If you draw an additional trend line up, you can see this move to the upside kind of accelerated in its pitch, and then we had this little correction. So we started this wedge, and then we started a new trend line, and now we have this other wedge. This type of a wedge is real common right here, where you kind of have an ascending triangle. This wedge is not common at all, and told us that a move was going to be significant when it happened. And so what we ended up with was a false breakout, and now a reversal. And there is a small gap right here too. There's a 1/4 cent gap or 1/2 cent gap from yesterday's close to today's open. And so beans have just accelerated lower really all night long. What we're looking for here in beans is a deeper correction. I think we've got a shot at coming all the way back to this low right here. I hope it holds it. It may or may not. If it holds it, it looks like that might be where we end this correction. It might take the entire month of November. Shoot, we might be there this afternoon or tomorrow. Who knows? But it looks like we're going to make that correction, and then we're going to kind of reassess and see what happens. The trade came really far, really fast, and now we're waiting to see if the weather in South America is going to hold, or whether they're actually going to grow a crop. We're waiting to see how many acres they actually planted, and we're waiting to see just what our final yield is going to be, and we're waiting to learn exactly how many bushels China is going to buy. So 3 huge factors there that are in play, and with an election coming up next week, it just seems to say risk off. But again, these technicals have been screaming risk off, and the downside was growing for a couple of weeks. And we've been talking about it for weeks on here. The daily chart is overdone, and it's meeting all of the criteria for a reversal, but the weekly chart is trying to hold us up, and it looks like the daily chart's going to get that correction. Let's look at the weekly real quick, because sorry, these trend lines kind of mess with the weekly chart as they redraw, but the open for last week was right down here at 1050. That is in play here this morning as we on the July contract, on the January contract. And if we're able to break that, that would be a massive outside, that would be a massive key reversal, where you take out the high of the previous week and the low of the previous week and close below the open. So that would be a massive key if it were to successfully take that out. And remember, we've been talking about all this support and resistance right in here. So what we want to see is personally, I'd like to see this hold and just turn around and go straight to the moon. But likely what we may say is we're going to come back down here and break it and come back down. Now, just because we come back down through it does not invalidate the significance of the fact that we broke it in the first place. A lot of people think that once you break major resistance and come back down and fail, that's a failure, and it's the onset of a new trend. That's not necessarily the case at all. It's like a rubber band. Once you stretch it too far, it doesn't retract all the way. Same thing with these stops. Once you poke a hole in it, it doesn't necessarily heal right off the gate. So we're still looking for much higher soybean prices, but I think we got to come test $10 first, and hopefully we get a chance to get some new positions on and trade that very aggressively when that does, when and if that does happen. All right, let's look at corn. Corn, kind of the same set of patterns, right? We've been talking about this for weeks. The daily chart is overbought. We're getting repeat exhaustion signals. The divergences have been in play for a couple of weeks, and finally they seem to have kicked in yesterday. Yesterday was a new contract, or a new high, down to a reversal bar, and today we have a gap lower with follow through. So that should be a top here for a little while. What we're looking for in corn is a little different than what we're looking for in beans. Beans, we're looking for a deep correction. Corn, we're really looking for a much shallower correction, something above 380. And we're looking for it to kind of grind lower, not necessarily crash down to it. And if we can get that type of setup, then this becomes extremely bullish down into a 38.2% retracement. All the way down to 350 is still bullish on this pullback on corn. So the top may be in, and if you need cash by the end of the year, or you need to finish your marketing, I would just say go ahead and move it, because likely we're going to move lower for a bit, 3-4 weeks, 5 weeks maybe, and then we're going to reassess. And the same thing, right? What does China need? How much do we have to give them? And what does the rest of the planet have to offer? So those three factors can line up, and that's what the traders are going to digest as we get into December, January, February, when our markets are going to decide how many acres we want to encourage you guys to plant. And if those macro factors line up, and corn decides that it needs to plant itself, then we can work much higher on these grains. So don't dismay, right? Don't get freaked out by this. Just sell it. It's okay to sell it, and it's okay to look to re-own it down in here. There's no harm and no risk in doing that, or there's no shame in doing that. I shouldn't say there's no risk. Okay, wheat. Wheat is following everything else. The conditions report for Kansas City wheat are not good, but we all know it's early, and there's a lot of ways to save a wheat crop. Kind of the same setup as the rest. Exhaustion signal started to trigger a couple of weeks ago. There is no divergence here. So we're actually looking to buy Kansas City wheat. I would like to see it coincide with the low in corn. And then we're looking for these highs to be taken out and moved higher. I think this challenge of that $6 mark is in play coming off of this setup. So if you got downside risk and you want to hedge it, I think that's fine. I think the corn setup is so powerful that it makes sense to me to leave some risk in next year's wheat crop. Because if corn does reset the way that it could, then wheat could get just overwhelmingly bullish. Because remember, the corn wheat spread, Kansas City wheat typically trades at a significant premium to corn. So if corn resets higher, wheat will probably outpace it. Is the general rule. So we'll see exactly what happens here in the near future. With that, I'm going to turn it over to Michael. Michael, are you here? I'm going to unmute you. Michael, can you unmute? There you go. Are you there, Michael?
Are you there?
Yep.
I am.
All right, okay, I'm going to turn it over to you, and I'm going to pull up your fertilizer maps that you sent over.
Perfect. Well, good morning, guys. I want to start first with a little bit of history of how we got where we're going today. First off, nitrogen, urea is king. Urea, I want you guys to think of it as corn in the grains. It's got the largest volume, it's got the largest demand. It's kind of the gold currency in fertilizer all over the world. 32%, it's more like Milo. Why I bring this comparison up is just like today, Milo, we see a premium in it due to basis over corn. But historically speaking, that's not how it normally is. In the process of making nitrogen, you start out with ammonia, then you move to urea. 32% is the last product. It also is the premium product. Why are we seeing a value better at a per pound basis? Today we're looking at about a 4 cent per pound better buy in 32 over urea. It's because of court cases. About 2 years ago, the EU brought a anti-dumping lawsuit against CF in the Europe domain area, and they lost it, which shifted about 200,000 tons of 32% from being exported to Europe to staying in the United States. In the US, CF is the major producer. They set the price. As a result, those tons were staying here in America. They lowered that value down, not based upon production, not based upon demand, but based upon getting rid of it because they don't have the storage facilities to keep the plants running 7 days a week, 52 weeks out of the year. So 32% price today has little to do to actual free market and more to do to CF, where they need that price point to be at to make sure their plants never have to shut down. As a result, that is why we're seeing the 32, which is historically had the biggest spread. We saw as high as 8 cents per pound spread between it and urea in the last calendar year, and for the longest amount of time we've ever seen. At some time that will reverse. We have no idea when. We just know that some point in time down in the future, it will reverse. That leads us into today on our phosphates. What's going on in our phosphates is much the same thing, except this time the players are Mosaic and Morocco. Mosaic is the country's, United States, largest producer of phosphates. Their mines are primarily in Florida. They are running out of quality rock to make our MAPS and our DAPS phosphates. As a result, with Florida EPA rules and regulations, the expansion of the cities, their ability to buy more ground to expand their mines is limited. Their cost of production is going up. Morocco, on the flip side, has the most available phosphate rock available of any place in the world. It's the most readily available, and they have a supply somewhere between the next 150 years to 300 years for the entire planet. Large investors have come in. They've built the most state-of-the-art facilities. So now Morocco has the highest efficiency factories with the cheapest rock. They can produce rock or phosphates now at a value that's cheaper than anybody else in the world. Mosaic in July filed a lawsuit against Morocco, accusing them of anti-dumping, and that's where we sit today. Morocco just filed a petition to the court asking for extension for them to build their evidence why they aren't anti-dumping. That is, extension is going to be awarded to them. It's going to be somewhere between 19 to 36 days. As a result, what we are seeing in the industry is importers aren't importing phosphate. And what I've been informed is the lawsuit that Mosaic brought is too broad. It goes out to where if you're an importer, you import, they can go clear back into April, May of 2020 and nail you for dollars per ton that you have to pay forward if Morocco is found guilty. So importers are nervous to bring any imports in. As a result, we are shaping up for 2020 to be about 1 million tons of phosphates behind on imports. What we've seen is on the liquid side, the acid to react 32 to make 1034O has skyrocketed in price. It's been put on rations. So we really expect phosphates, not only price is going to be a challenge, but even availability can be a challenge for the 2020 growing crop. So one of my advisements to guys is get out, get early, get soil tests, figure out what you need, and start planning that piece of your nutrition as soon as possible. Be ahead of this curve. Don't be a guy sitting next spring saying, man, I need phosphate, but I don't know how to source it. I can't find it. That is where the market takes advantage of people. On the nitrogen side of things, we are looking good on supply, but that's kind of a loose term. And the reason why I say that is one of the things in the fertilizer markets, as much as on the grain, I like to set the fertilizer different than the grain. We will cuss and curse the USDA reports, but at least there's some numbers. In fertilizer, we just don't have numbers. So we will sit and talk about how many bushels were produced in 2019. The problem is I have no numbers to understand how much nitrogen or how many tons of phosphates were actually consumed in 2019. How many acres went out in 2019 without fertilizer on them? How many acres went out in 2020 without fertilizer on them? The industry is anticipating that nutrition was slashed in the spring of 2020 due to the economics. I would tend to agree with that. I think that's what occurred. So we are anticipating a higher demand in 2020 as we see a run up in prices of grain to offset the lack of nutrition put on 2020. So we're going to see excess tons move. If that's the case, we're shaping up to be about 1.5 million tons if we plant about 93 million acres of corn again in 2020, short on urea. Now, I bring this all up because of the fact that when you get into your I states, 32% just logistically is not an option for them. There's too many tons that have to go on the fields. There's too much volume. They just can't move that much product to keep up with demand. As a result, we just don't see a lot of those acres switch to liquid. They're going to be all about ammonia. Right now, our forecast for the next 6 months on ammonia is pretty flat. We don't see much demand. So we are anticipating right today that the weather's going to hold. There's going to be opportunity for ammonia to flow into those fields. The nitrogen piece is going to get taken care of, and the rest of that nitrogen is going to be pushed off into the spring. Look for the weather. Look for any disruptions in that ability for that nitrogen to get place. Because if it does, now nitrogen too can become a hot commodity this spring. Right now, we have some great pricing, and I say great kind of loosely, I always want it cheaper, versus grains. Tim was kind enough to add these charts. The first chart here is NOLA urea versus corn. NOLA is our baseline for fertilizer pricing. That's kind of where the value the world works off of everywhere. Our maroonish line here is our urea for 2020. And we will look to see here, we're coming in about a 52 bushel ratio for a ton of urea. So if you compare that to the last couple of years, June, July tends to be our low in our markets in our 12 months, but we're already better valued today than anywhere else in 2020. We haven't hit near as low as we got clear down to about a 42 value in June of 2016. So that's kind of our all-time best purchase, but we're approaching. If we roll on over to the UAN is going to be today right around that $28 28 bushels, per ton of fertilizer. If you look historically, we have never seen that great of value. We are better today on a bushel of corn purchasing UAN than we have, and actually all-time records we're smashing most of them on this actual ratio here. And then finally, we'll look at the DAP. DAP map DAP is a basic product. MAP is an acidic product. So when you have your basic soils, you go on with MAP to offset it. When you have your acidic soils, you go with DAP. DAP tends to be the broader product used worldwide, so they typically give our grafts all in the DAP. There's a little spread between the two, but typically it stays pretty much in ratio. The blue line that just falls off here, that is 2019. A year ago, we were seeing the best values for phosphates across the board that we have seen in a lot of years, like 10-year terms speaking. It was the best opportunity to build phosphates. Today, because of the rally of grains, that actually isn't as bad as it once was. I mean, clear back here in September, we were at about 108 bushels of corn for a ton of DAP. Today, we're down to about 85. So we are trending in the right direction. I'm not sure that, depending on what a farm's needs are, depending on what you're doing, I don't know even today's values make a lot of sense to go build P. I think this is more of a maintenance year on phosphate. Last year was the year to go build. So that's kind of where we're at. We are more than happy to assist you guys in locking in product, getting some contracts set up for locking in prices into the future, options of different products, liquid, dry, availability, and then storage, and getting you guys set up to take advantage of this. But this is where we're seeing. We are seeing right now, these are the times to start be thinking about pricing, getting pricing, and making a fertility plan as these crops get harvested. That's all I have for you this morning, guys. Please feel free to call with questions, and I'd be happy to answer them.
All right. Hey, thank you very much, Michael. Then thank you guys for listening to that. I know that's a common question that I've been getting. So we'll see real quick on the grain wrap-ups. If you need anything, please let me know. And as always, there's risk in trading grains. It's not suitable for everybody. And if you have questions, please talk to somebody before you get overextended, especially in these markets as volatility picks up. Happy to answer any questions, and we will talk to you guys next week. Thanks.